You think your money is safe in a bank? Think again. That sentence alone has made more people uncomfortable in 2025 than ever before. Because the truth is, people used to believe their savings account was the safest place on earth. But then inflation hit 8%. Then banks like Silicon Valley Bank collapsed almost overnight. Then interest rates changed so fast, it crushed both borrowers and savers. And suddenly, what used to be safe started to feel like a trap. So here's the hard truth no one wants to admit. Your cash is slowly dying. And keeping it in a bank doesn't protect it. It just hides the problem longer. But what if there were assets that were actually safer than cash? What if there were 7 of them? Assets that don't just sit in a vault, but protect your future when everything else is falling apart. Some of them are physical. Some of them are digital. Some are hidden in plain sight. But every single one of them is something the rich have used for decades to stay ahead of financial chaos. Today, I'm going to walk you through all 7. Not in a get-rich-quick way, not in theory, but in a serious, no BS look at where safety truly exists when the world gets unstable. We'll start with one of the most controversial and misunderstood assets of our time. Asset number 1. Bitcoin, the untouchable money. Now, before you roll your eyes and think, ugh, another crypto bro, let's take a breath and get serious. Bitcoin isn't a meme coin. It's not about lumbos and moon rockets. It's a digital asset built on one idea. No one can freeze it, take it, or inflate it. That's what makes it safer than cash in certain conditions. Let's break it down. When you hold US dollars, you're holding something that loses purchasing power every single year. The Fed prints more. Inflation eats away at it. You wake up, and suddenly your $100 buys $93 worth of stuff. Next year, maybe $89. But Bitcoin? There will only ever be 21 million BTC. No more. No less. It's decentralized. No bank controls it. No government can seize it without you giving up your keys. And it's globally recognized, transferable 24/7, and increasingly adopted by institutions. Think about this. Argentina's currency collapsed. Bitcoin became a lifeline. In Nigeria, people turned to Bitcoin when the banks imposed withdrawal limits. Even in the US, more people are using it as a hedge against traditional finance. Is it volatile? Yes. Is it perfect? No. But compared to a checking account losing 3 to 8% annually, or a 0.01% APY savings account, Bitcoin isn't speculation anymore. It's a lifeboat, especially when you hold it properly. Not on an exchange, not with a broker, but in a self-custodied cold wallet. Your keys, your coins, untouchable. Here's the deal. In the coming years, we're going to see more currency crises, more bank failures, more political interference in money. And the people who sleep well at night aren't the ones with $200,000 in Chase. They're the ones with 1 BTC in a ledger they control. That's just the beginning. Because the next 6 assets are even more powerful in how they quietly protect you, while everyone else is distracted chasing short-term gains or safety in name only. Let's move on to asset number 2, which has survived every war, every collapse, every empire. You ready? Asset number 2. Gold, the survivor of empires. They say gold is old, and that's exactly why it's powerful. Because in a world where currencies collapse, tech stocks plummet, and governments change overnight, gold stays. Let's be honest. The US dollar isn't backed by anything. It hasn't been since 1971. Every dollar in your hand is just a promise, one that gets weaker the more they print. But gold, it needs no promise, no signature, no central bank. It's been money for over 5,000 years. It's outlived kings, regimes, and revolutions. Empires have risen and fallen, gold remained. When your great-grandfather held a gold coin, it could buy a suit. Today, that same coin can still buy a suit. The dollar? It's a shadow of its former self. So why does this matter in 2025? Because we're living in a time where national debt is over $34 trillion. Inflation still lingers even after rate hikes. Countries like China and Russia are stockpiling gold, preparing for a post-dollar world. And everyday Americans are seeing their savings buy less and less. Gold is not about profit. It's about preservation. When a currency fails, when systems break, when trust erodes, gold becomes real money again. It doesn't rely on a server or a signature. It just is. No wonder central banks bought more gold in 2022 and 2023 than in any year since 1950. They know what's coming. Maybe you should too. So what does this mean for you? It means you don't need to go all in. But having 5 to 10% of your portfolio in physical gold, yes, actual coins or bars you can hold, can be the difference between sleeping well during a crash and panicking as your digital money loses 40% overnight. Gold is boring, gold is slow, and gold is safe. Let's move on to something a bit more active, but just as protective. High-quality stocks that pay you to wait. You've heard of stocks. You probably own some. But here's the catch. Most Americans don't own the right ones. They chase meme stocks, penny stocks, hype IPOs. They get burned, then say, the stock market is a scam. But let's look at what wealthy families do. Not traders, not speculators. I'm talking about dynasties. They hold stocks that are undervalued, have strong fundamentals, pay dividends, and have a track record of surviving recessions. Think Johnson & Johnson, Coca-Cola, Apple, bought in 2010s, held long-term. Realty Income, a REIT that pays monthly dividends. These aren't just tickers, they're cash flow machines. Owning these stocks is like owning a piece of a business that never stops working, while your cash loses value. These companies are raising prices, cutting costs, and mailing you a dividend check every quarter. And here's the secret. During market crashes, these stocks often drop less. And when the dust settles, they recover faster. You don't need to time the market. You just need to own the right part of it. But most people don't do this. They hold cash. They sit on the sidelines. They say, it's not the right time. Meanwhile, inflation eats their future alive. What if, instead, your portfolio paid you every month? Not because you're trading, but because you own the machine that produces money. The world's top 1% don't just save. They own assets that grow while they sleep. The right stocks, dividend-paying, undervalued, recession-resistant stocks, are one of the few paper assets that can actually protect you long-term. And that brings us to asset 4. It's not gold, not Bitcoin, not stocks. It's something even more powerful because no one can steal it, tax it, or regulate it. It's the one thing that guarantees you'll never be broke. Let's talk about it next. Asset number 4, your skills, the untaxable, unstealable asset. Let's be blunt. You could lose your job. You could lose your cash. The market could crash. Your house could burn down. Your bank could freeze your account. But no one, not the government, not inflation, not even a recession, can take away your skills. In a world that's changing faster than ever, your most secure asset isn't in your bank account. It's in your brain. Here's the thing. Most people treat skills like tools. They pick them up when needed, then put them away. But the wealthiest, most resilient people in the world, they treat skills like compounding assets. A marketer who learns copywriting can pivot into sales. A graphic designer who learns web dev can start an agency. A regular employee who understands financial statements can start buying real estate. The skill pays the bill, but the right skill builds the life. Let's take a real-world example. During the 2020 lockdowns, millions lost jobs. But those who had a high-demand skill, like SEO, design, UX, coding, trading, copywriting, didn't just survive. Many thrived. Why? Because when the world froze, they stayed useful. They didn't need a boss. They didn't need a rescue. They had leverage. Now here's the most overlooked truth. Skills outperform degrees. Every single time. Degrees depreciate. Skills compound. A $15,000 degree might get you a job, but a $150 course on copywriting could land you a client worth $10,000 a month. And you don't need permission to learn it. You just need Wi-Fi and hunger. Your skills are the only asset you carry with you 24/7. They don't crash in a recession. They don't get taxed like income. And once sharpened, they make you recession-proof. So the next time you feel stuck, ask yourself, what skill would change my earning potential in the next 6 months? Then go by the books. Watch the tutorials. Build the reps. Because the real safe haven isn't gold or crypto. It's knowing how to create value on demand. And now, we go one level deeper. Because the next asset can protect your family for generations, if you know how to build it right. Let's talk real estate. Asset number 5. Cash flowing real estate. The inflation killer. Most people think of real estate as buy a house, hope it goes up, retire someday. That's cute. But let's talk about the kind of real estate that doesn't wait for appreciation. It pays you every month. Introducing cash flowing real estate. Duplexes, triplexes, fourplexes, small multifamily units, short-term rentals in the right locations. These aren't fancy. They're not HGTV material. But when done right, they do something magical. They turn your dollars into a stream of income that rises with inflation. Let's break that down. Say you buy a 3-unit property. Each unit rents for $1,200 per month. Your mortgage and expenses total $2,400. That means you cash flow $1,200 per month after everything. Now here's the kicker. Next year, rent goes up 5%. Inflation's high. Groceries cost more. Gas costs more. So does rent. Your cash flow rises too. You're not fighting inflation anymore. You're riding it. Meanwhile, your mortgage stays fixed. Your tenants pay it down. You're gaining equity every single month while collecting income and sheltering some of it through depreciation. No stock gives you cash flow, equity growth, tax advantages, and inflation protection all in one. But real estate? Done right, it does. Now let's be real. Real estate isn't passive. You need to screen tenants, maintain the property, handle surprises. But here's the thing. You can hire a property manager. You can start small. House hack. Rent out a basement or garage apartment. You don't need to be rich. You just need to be smarter than the average buyer. And in times of chaos, when dollars fall and banks fail, a building that pays you to hold it, that's not just an asset. That's power. Let's take a breath. We've covered 5, each one designed to do something your bank account never could. Protect you, grow you, and outpace inflation. But we're not done. The next asset is one almost no one talks about. And yet, it might be the single most underpriced investment you can make in 2025. We'll get to that next. Asset 6, a personal brand, the new digital real estate. In the 1990s, owning real estate meant power. In 2025, owning attention means leverage. And nothing gives you more leverage than building a personal brand. Now, don't get it twisted. This isn't about going viral, dancing on TikTok, or chasing clout. It's about one thing: owning your reputation online. Here's the hard truth. People buy from people. People hire people they trust. People promote people they recognize. If no one knows who you are, you can be brilliant and broke. But when you own your name, your story, your space on the internet, you become impossible to ignore. And the best part? It scales with no gatekeepers. A freelancer builds a following on LinkedIn and lands premium clients. A designer shares projects on Twitter and gets job offers from 4 countries. A real estate investor posts YouTube videos and raises private capital without asking the bank. This isn't theory. This is the new economic moat. In the old world, your job title defined you. In the new world, your online presence does. Because when your name becomes a search result, your value multiplies. And here's what most people miss. A personal brand isn't about ego. It's about insurance. If you ever lose your job, pivot careers, or launch something new, your audience follows you. You don't start over. You start from influence. In a noisy world where attention is currency, your name, your voice, your story, that's your asset. Not just today, but for life. Asset 7. Community. The most overlooked wealth multiplier. This one's different. It's not gold, not crypto, not real estate. It's people. Not just any people, your tribe. The 5 to 10 individuals who challenge you, sharpen you, open doors you didn't know existed. Let me ask you something. Who do you call when you're overwhelmed financially? Who's in your circle when you want to learn a new skill? Who do you talk to about building wealth, not just making money? If your answer is no one really, that's not just sad. That's dangerous. Because success isn't a solo sport. The rich don't just share capital. They share information, opportunity, and accountability. They have people around them who say, that deal doesn't smell right. You're playing too small. Here's a better way. That kind of feedback, you can't buy it, but you can build it. And here's the kicker. In hard times, like recessions, layoffs, black swan events, your network becomes your safety net. One connection can get you a job lead, an investment opportunity, a life-changing idea. One person, one room, one dinner conversation. That's how fortunes are made, quietly. So ask yourself, am I surrounded by people who pull me forward or keep me stuck? If it's the latter, you've identified your next asset to invest in. It doesn't live on a balance sheet, but it changes everything. Because when everything crashes, your community is what helps you rebuild. The world is changing. So should your strategy. Let's recap. Not just the list, but the truth. Cash is not king. It's a melting ice cube. Gold survives what fiat can't. The right stocks pay you while you wait. Skills make you unemployable in the best way. Real estate can turn inflation into income. A personal brand gives you leverage. And your community? It multiplies your odds of winning. Most people won't act on this. They'll watch the news, complain about inflation, blame the system, and keep their savings in a 0.01% interest account, hoping someday things get better. But not you. Because now you know. You don't need $1 million. You don't need a financial advisor. You don't even need to be lucky. You just need to start moving your cash into things that actually hold value. You're not too late, but you are on borrowed time. So if this video made you pause, reflect, even feel a little uncomfortable, that's good. That means you're waking up. And when you're ready to keep going deeper, you'll find us right here, quietly sharing what they don't teach in school. Because financial freedom was never meant to be a secret. It was meant to be built, deliberately. Direct hit. If this gave you value, you know what to do. We're not chasing followers. We're building a tribe. Welcome to the 1% who see through the noise.